Good afternoon, everybody. Thank you for joining us today for basically a two-part webinar that we'll be having today. The first part covering the 2021 legislative session, and then the last part will be on the American Rescue Plan. And so we'll start off first going over the ISAC legislative priorities and how they shook out through the 2021 session. So first of all, on mental health and disability services, as many of you know, at the very end of session, with passage of Senate File 619, the funding for mental health and disability services in Iowa has dramatically changed, moving from primarily county-based funding system to a state-based system. And that will transpire over this next fiscal year. The most immediate thing that folks should be hearing from, and I know Carrie will be notifying counties here soon, is in regard to the new statewide levy of $21.14 per capita. The counties, if they're above that, they will have to lower their levy accordingly. And so if the governor goes ahead and signs that legislation, the Department of Management will be contacting all the counties that are above that on their levy to lower that to that amount. There's a number of different things as a result of moving to more of the state-based system that we're still working through. While the basic governance of the mental health regions has stayed the same, there are a number of different issues that we are working through in terms of, payroll for employees of the regions. They are county employees at this time, and how that would work. And then also to just a number of different logistics in terms of office space, and then also a number of county auditors are the fiscal agents for the regions, and how that would work moving forward. And so ISAC will be putting together a group of supervisors, regional CEOs, and auditors to work through those issues as we go through that transition. So with that, I will turn it over to Lucas to talk about the other aspects of Senate File 619 in regard to the backfill.
Thanks, Jamie. As our members know, the large property tax bill in 2013 put in place the commercial and industrial rollback reduction, and put that at 90% and froze it at 90%. It was formerly at 100% of assessed value. So now the taxable value is at 90%. And the state promised to make up for lost revenue because of that reduction in taxable value. And that's become known as the backfill, or the commercial and industrial replacement claims. Well, it only took a couple of years, and they started talking about maybe phasing that out or getting rid of that. And so for the last number of years, that's been one of our top priorities, is to protect that. Unfortunately, this was the year that the promise was broken. So as part of their large tax bill this year, they did put in place a phase out of the backfill. The total number for all local jurisdictions is about $152 million, 29 million of that for counties. And so they will phase that out. They say 4 and 7 years. I call it 5 years and 8 years, because those are the years that it actually reaches zero. But whatever you want to call it, it's a number of year phase out. The reason for the difference in the number of years is they took the statewide average of property taxes coming in, and if you're below the statewide average, you will you'll have the 8-year phase out, and if you're above, you'll have the 5-year phase out. So there are 58 counties that are below that will have the 8-year phase out. And I believe we earlier sent a document from the Department of Management kind of looking at what that'll look like over that number of years. So if you did not receive that, please reach out to us and we can get you those numbers for your county on how that phase out will look. This was kind of interesting that this was also part of the same tax bill where the state says we're going to fund mental health now, we promise. And then in the same bill, they break the promise on the backfill that they made that they would fund this, ongoing. So that was obviously frustrating for us. We'll make it work. But again, if you have any questions on what that means for your county, please reach out.
All right, thank you, Lucas. Next, one of our priorities is on emergency medical services. Something that we have been seeking for many years now is to allow this for county boards of supervisors to declare this as an essential county purpose. And we were very pleased that this legislation, Senate File 615, actually the governor is going to be signing this over in Eastern Iowa at 4:30. Which would allow counties to declare this an essential county purpose will go into law. So we're very pleased by that. Lastly, our last priority in Iowa's natural resources and outdoor recreation and water quality and quantity. Unfortunately, the Natural Outdoor Resource Trust Fund was not funded this year, but REAP, the sunset of REAP was extended by 3 years. And also another aspect of our priority in regard to water quantity was also realized with passage of legislation that it would allow for flood mitigation efforts to also be an essential county purpose. So we are very pleased by what transpired with that. Next, we'll just briefly go over our legislative objectives that move forward this year. First and foremost is broadband expansion. The governor had put forward her robust plan to expand broadband to all corners of the state. And when everything finally shook out, $100 million will be invested that counties will have access to funding to expand broadband throughout Iowa. This is something that we'll be talking about further as we look at the American Rescue Plan and how those dollars can work together, not only from the federal side, but also on the state side as well, that we'll be working on as well. Next, I'll turn it over to Lucas on commercial driver's license testing.
Yes, this was a legislative objective that came from the treasurers. It simply allows a fee of up to $25 for each of the 3 parts of the CDL test that the treasurer or his or her office staff would administer. And this is basically just covering the cost of doing business. There wasn't a fee that could be charged before. So $25 for each of the 3 parts administered.
And then next on the Emergency Preparedness Supply Weekend, this is something similar to the sales tax holiday around the start of when schools begin. This came from emergency management, that they would like a similar holiday for folks to prepare, for purchase of generators and other emergency preparedness supplies. So we're very pleased that that passed this year. Lucas, for the next one.
Yes, this is another proposal from the treasurers, and the objective called for doubling the threshold the limit for the elderly and disabled tax credit. Currently, it's limited to $1,000 per applicant, and that's based on income levels. So it's not necessarily $1,000, but it's capped at $1,000. We were calling for that to increase to $2,000. That's not exactly the way that it shook out, but there is an expansion that was included in the tax bill that we've talked about earlier that would put in place a base year for when you first apply and are granted the credit, and then any increase in what the qualifying property owner actually receives, or what the qualifying person experiences in their property tax bill, any increase would be covered by the credit. So as you know, property values go up, maybe levies go up. Oftentimes the property tax bill increases. So from the base year to current year, that difference in the property tax bill would be covered by the credit. So it's not going to double that $1,000 as we called for, but it will, in fact, expand the credit. Now, you may notice that this one is in yellow and the rest are in green. And the reason for that is the yellow means proceed with caution. The state legislature decided to exempt Iowa Code 25B.7, which says that any credit that is not paid for by the state does not have to be extended to the property owner by the local jurisdictions. This basically puts into effect the fact that local governments will absorb the cost of that credit, and the state is not funding it. So it will go to the local government, and they will experience a loss in revenue due to the expansion of the credit. So, you know, we like part of it. Of course, we prefer that for credits that the state is extending, that the state actually pay for it. So kind of mixed emotions on this one. Another thing that I would note is that this will continue to increase over the years, not only because of more individuals aging into eligibility, but also because of the increases of property taxes. That gap between the base year and current year as time goes on will increase. And so the Legislative Service Agency is estimating maybe a little more than $1 million the first year, but by the time you get out into around fiscal year 2030, you're looking at maybe $30 million for all jurisdictions. On a statewide average, counties are usually around about 20% to 24% of their property tax bill. So you're looking at, what would that be, $6-7 million statewide for counties that will have to absorb.
All right, and next comes from our county auditors in regard to placing public measures such as bond issues on the general election ballot. This is something that the Iowa legislature took away a few years ago, but fortunately this year in legislation it was restored. So this is something that will be an important in terms of increasing voter participation, specifically on public measures. Next, on super speeders, as we've seen a number of the increase in high-speed accidents that have occurred throughout the state. This legislation comes from the sheriffs and deputies and increases the penalties for those that are convicted of the death of someone by going over 25 miles an hour over the posted limit. And then I'll turn it over to Lucas.
Surviving joint tenant was a proposal from the recorders. Currently, when a surviving spouse needs to, or a joint tenant needs to transfer real estate to take off the decedent's name, there's an affidavit that needs to be filled out. And prior to this legislation passing and being signed, the code said that it needed, the affidavit needed substantially these 7 items. Now, the word substantially led to a lot of inconsistency statewide. Some would have 4 of the 7, some would have 7 of the 7, and these forms were looking very different on a statewide basis. So this bill simply removed the word substantially so that each affidavit has all 7 items, and that provides consistency statewide. And then the final one is on surviving spouse for title and registration fees. This also came from the recorders prior to, and again, this is July 1, applicable July 1. So when I say current law, I guess it is for another half a month, and this one was also already signed by the governor. But basically a surviving spouse that needs to update their title and registration for an ATV, snowmobile, or boat to remove the decedent had to pay the title and registration fee under current law. and we simply ask that that be waived. There's no reason for a surviving spouse that just needs to remove their deceased spouse from the title and registration to pay a fee. So we are waiving that fee.
All right, thank you, Lucas. In the interest of time, I know you might have some additional questions from us. And what we will be doing, as we have normally done throughout the years, is providing an overall summary of all the bills affecting counties. And that will be coming out later on the summer. But in the meantime, please don't hesitate to continue to reach out to us in regard to any questions you would have about legislation that affected the counties out there this year. And so next, we will be moving to the second half of this webinar in regard to the American Rescue Plan. And so I know a number of you have reached out to us, and we are glad that you are in regard to this on a variety of different topics. I'll be very brief because I want to leave a majority of the time to our national partner in NACO, and then also with Carrie with the Department of Management. For what we have provided and we will continue to provide is located on our website as additional information becomes known to us. What I will continue to strongly recommend, as you see on the screen right now, is to continue to reach out to us with any individual questions in regard to that at the ISAC ARP at iowacounties.org web address. So please reach out to us and we will get back to you as quickly as possible. The biggest thing now that as counties have been applying, continue to reach out to us if you're having any issues and navigating it through the federal system, the U.S. Treasury system. And then obviously the biggest questions we're receiving right now are the eligibility of projects. And so this will be one in a series of webinars that we will be providing for members. And so please stay tuned for that. We're already working on another webinar for next Thursday to work with the state auditor and some other aspects of the American Rescue Plan. So with that, I was actually going to turn it over to our great partner in NACO, Mr. Rotako, the head of government relations for NACO. NACO has been excellent in providing webinars, and then also their clearinghouse that they have provided for all of our members that we continue to push people towards to look for additional updates in terms of FAQs and additional information. So thank you, Mark, for joining us today.
Thank you, Jamie. I hope you can hear me. I just got a message that my internet wasn't working. So if you can hear me, give me a thumbs up, maybe. Thank you. And thank you, of course, to Bill Peterson, Carla Becker, and of course, Grant Veeder and Melvin Hauser, who are on NACO's board from Iowa. It's great to be with you today. It's such an honor to talk to you about this historic investment in local governments, the American Rescue Plan. Again, my name is Mark Rotako. I'm NACO's Director of Government Affairs. And I have more slides than can fit into 10 minutes. So one of the questions I always get is, can I send these slides out? And the answer is absolutely yes. So if you could just go to the next slide, I'll try to get through it as fast as possible. So a couple of weeks ago at this point, Treasury put out guidance on how counties can spend the $65.1 billion that came directly to them from the American Rescue Plan. And these are important dates and key highlights of the program. And so overall, high level, the plan invests $65.1 billion in counties of all sizes. A similar pot of money goes to cities of all sizes. And the combination of the two, about $132 billion, goes to states. And so next slide, please. There are a lot of NACO resources that I appreciate you mentioning. There are also other resources that I would recommend that you read on Treasury's site, and a screenshot of which can be seen right here. NACO has a analysis of the interim final rule, but you could read the rule itself, which I would encourage you to do on Treasury's site. They also have a fact sheet, an FAQ, a quick reference guide, and the county fund allocations. Of the 5 resources you see on the screen right there, I would maybe start with the quick reference guide and work backwards to the interim final rule, which is 151 pages, the last 30 of which are very actionable. And so maybe start there on that 151 page document. Next slide, please. Here are some key dates. When the interim final rule or the American Rescue Plan refers to the declaration of the public health crisis, that's January 2020. March 3rd, 2021 is another very important date. This is what's referred to as the covered period. So counties can have incurred costs that would be eligible to be recovered starting on March 3rd, 2021. Treasury updated their guidance yesterday afternoon to say that if you are going to disperse the money to nonprofits, small businesses, or households, those entities don't need to have incurred costs after March 3rd, 2021. So for instance, if a renter is in arrears and you in January and February, and you're going to give them rental assistance, you can give them rental assistance to those dates prior to March 3rd, 2021. July 16th is another really important date. It's when comments on the interim final rule are due. So if there's any small tweaks or other comments that counties want to give, NACO will certainly be providing comments. We would encourage counties to submit their comments as well. We'll actually be creating a template for them to do so. And on the comments, I should say that Treasury has been a really good partner so far. We've been submitting informal comments, and they've been incorporating those comments into their FAQs that they publish every couple of weeks. So a lot of our comments have kind of already been addressed, which is good. August and October are reporting deadlines, which you can read on the screen. And again, I will send out afterwards. And then December 31st, 2024 is when recovery funds need to be obligated. And then 26 is when they need to be actually spent. So next slide, please. Here are some ways that the title of this slide is sample allowable uses, but what that really means is this is not an exclusive list of the things that ARP money can be spent on. And so the main big buckets of eligible uses are to support the public health response. And this is very broad. This is everything from testing, vaccinations, PPE, social distancing, capital costs to create social distancing, HVAC, sort of you name it on the public health side to deal with COVID-19. And then to address the negative economic impacts of COVID-19 to the extent that negative economic impacts occurred. So this would be aid to small businesses, other impacted industries such as tourism or hotels, restaurants, and the workers and families that are in those industries. And then of course also the public sector. You're also able to replace public sector lost revenue. So it's a bit of a complicated formula that I go through later in this slide deck that again, I don't think I'll be able to get to today, but if you can calculate and show that you have lost revenue, you could use that amount of lost revenue to do essentially anything that's a government service, which would include the question I get the most in this realm is infrastructure. So if you have $1 million in lost revenue, you could use $1 million to fund, but not finance, an infrastructure project, or again, any other government service. Another allowable use is premium pay. And premium pay is capped at a certain amount. And if it's for your private sector partners, so for instance, if you want to give premium pay to grocery store clerks, there are limits and obviously guidelines on how to do that and who those people are. But premium pay is also available for any county employee who was not teleworking, essentially. The interim final rule lists a bunch of occupations, and then they say any government employee. Importantly, and moving on, one of NACO's priorities in this bill was to have there be an allowable use for infrastructure development and deployment. And I noticed that one of your priorities is broadband development. One of the allowable uses in this bill is broadband, as well as water and sewer infrastructure. Now, the broadband, water, and sewer infrastructure does not need to be related to COVID. This is just general ability to fund water, sewer, and broadband. Next slide, please.
Hey, Mark, I don't mean to interrupt, but we're actually ahead of time, so don't feel the need to rush through anything. So we're good on time. So
thanks so much. When would you like me to wrap up?
No, you're good on time right now. So
Okay.
we have you now until like 1:35. But if you would go even a little bit longer than that, that would be fine. Your information is excellent. So
Sure thing.
Yeah.
And hey, this is Carrie. Sorry, and I'm DOM on the agenda too, and I probably can do mine in 5 minutes. So yeah, just kind of, I'll give you some of my time too.
Okay, I usually get the early hook. This is it's rare that I get to keep talking, but thank you. I really appreciate that, Carrie and Jamie. That's very nice of you. So the first allowable bucket that's specified in the bill is to support the public health response. And as I said, this is a broad range of eligible uses. And we have case studies that would kind of illustrate what these eligible uses might be. But in the early 2021, it's vaccine programs, vaccine incentive programs, the PPE required for administering those programs, medical expenses very broadly. So those are going to be expenses to enforce social distancing. Again, PPE, testing, testing sites, the personnel to staff those testing sites. And then also kind of tangential to COVID, but not entirely related, is behavioral health care. The interim final rule really talks a lot, and I'll get to it in a second. They make sort of recommendations in this space to invest in behavioral health. They don't mandate it, but they give a broad ability to do so. And then, of course, the negative economic impacts that I talked about before. Next slide, please. And so these negative economic impacts are, the way we see it, are these four buckets. You have workers and families. So this is like broad assistance to unemployed workers. I mean, it could be, if we can go back one slide, sorry. Unemployed workers, I mean, food, housing, just cash in the way that the stimulus bill gave direct allocations to individuals. And then small businesses, loans and grants to mitigate financial hardship, loans and grants to create additional space for them, COVID prevention. You can imagine some physical modifications to small businesses that would be COVID related. And I should say that small businesses and nonprofits are in this bucket. So nonprofits that are, work with both the public and private sector, broadly eligible. Then the public sector, to rehire county staff and other public sector uses, including, which is a question we get a lot, the ability to hire someone to manage these funds for larger counties, and even smaller ones. A consultant or just sort of a manager of this program is an eligible expense for this money. And then impacted industries such as hospitality, certainly restaurants. You can have sort of a restaurant fund, many options there. Next slide, please. And then again, a ability to, but not a requirement to, is to provide equity focused services. And again, the interim final rule from pages like 1 to 120 talk about big ideas on how you could provide equity focused services, such as housing and homelessness, childcare, equity in childcare, equity in the distribution of social services. So for instance, if you wanted to create more services in low-income neighborhoods, for instance, to build an office or hire staff, like all of that would be eligible in this. Next slide, please. And then this idea of replacing lost revenue. And let me just say that the interim final rule, there's kind of a fork in the road. So it says you could spend this direct to county allocation, and your cities can do the same on these 100 things. But if you have lost revenue and you're able to show lost revenue, you could do, I believe the rule says, any government service. There are some limitations on what any government service means, but it is incredibly broad. And so the formula to use is more complicated than I can explain right now, and I would bore you to tears, but for the most part, the idea is you take a baseline amount of revenue from a year before the pandemic. Then you calculate what your revenue might have been using a formula if there was no pandemic. And then you look at your actual revenue. And if your actual revenue is below that counterfactual amount, you have lost revenue. And why is that complicated to explain? Because the amount you're allowed to sort of claim is possible that you wouldn't have actually lost revenue. So let me put it this way. Let's say your revenue grows at 1% every single year. The rule allows you to multiply by 4%. So even if in the pandemic you grew your revenue by 1%, that is 3% less than the allowable expansion of revenue under the rule. So you would be able to claim that extra 3%, if that makes sense, as lost revenue. And once you do, the eligible uses of this money become incredibly broad. Not to say that the explicit eligible uses aren't broad already, but this becomes even more so. Next slide, please. I'm sure I'm going to get a question on that, so we can address it later. Let's go to the next slide because I explained most of this. Okay, premium pay for essential workers. As I said before, the rule defines who these people are and what they might do. But the important part for us is that any work performed by employees of the state, local, or tribal government, any work by an employee performed. So that is the most expansive allowability for premium pay in the rule. Next slide, please. These are reporting requirements that I talked about earlier. Big counties, and I'm not sure that any counties in Iowa qualify for this. So very large counties have to not only report by August 31st, they have to create like a plan for how that they will spend the money. And I'm not certain that any Iowa counties qualify for that. So we'll just kind of breeze past it. If it does, you probably know by now, you don't even need to tell you. And then October 31st is another reporting deadline. Next slide, please. I've said a lot here, and so let me give you the option to go to NACO.org into the COVID-19 clearinghouse. And you probably can't see my mouse, but I can. I'm pointing at this blue box in the middle. And if you click on that blue box, no, the other one to the how can we help? So if you click on the blue box, and you probably can't do it here, but yes, thank you for circling that. That takes you to a form where you can fill out your specific question. And as someone who sees all these questions, let me tell you, like, there are no dumb questions. Many of the questions are, I have this idea that I want to basically invest this money in. Can I do that? And for a lot of them, we know the answer and we can tell you yes or no. But for the ones that we don't, we can move that along to Treasury. And hopefully they will either answer the question for us or they will answer the question broadly in their next round of FAQs. And that's what's been happening, is that we have been holding webinars like this. You ask me questions, I send those questions to Treasury, and they show up a couple of weeks later as answered in this running FAQ document that they have. And so NACO.org/coronavirus, middle blue box, that is how you can communicate your question. But the green box next to that is also really important, because this is the ability for counties to kind of show the world how they are innovatively spending this money and making their residents' lives better. And this Share Your Story tool and idea is especially important because there are some in Congress, including Iowa's 2 senators, that have floated the idea of repurposing or otherwise sort of reallocating or clawing back in the worst case scenario some of this money to pay for other things. And sharing your story is really important to show federal policymakers that counties need this money and are using it to invest in our communities in innovative and smart and efficient ways. Next slide, please. I think that's it. Okay, thanks. Only slightly over. I'd be happy to take questions at the end or now, however you like to do it.
Yeah, I know we'll have some time for some additional questions, Mark, but one initial, and I'm sorry, it's probably the most complicated of which you described, is the whole issue of revenue loss and how to calculate that. And so we have a question: must you abide by uniform guidance requirements when using ARPA funds received for / allocated as county loss revenue replacement, as opposed to procurements for broadband infrastructure or supporting public health response?
I don't know if I understand the question. Maybe I don't know what uniform guidance requirements are, but I'm reading it now on the screen too.
Yeah.
I don't know. I don't want to say the wrong thing, but let me say this: the rule is intentionally very broad in terms of the ability to use money for lost revenue. And so it's almost like the way it's set up, it's like if you could, once you have lost revenue, lots of different avenues of expenditures open up.
Gotcha. So I think that's probably the biggest thing, and we'll probably have another webinar dedicated specifically on this issue of lost revenue for folks that would want to tap into it. So, as certainly, stay in contact with us in terms of a uniform formula that county with all 99 counties can follow if that's the area that they want to follow. So
NACO actually just held a webinar that went in really deep on the math of all of this. As the next person is talking, I'm going to find the recording and put it in the chat.
Appreciate it. Thank you so much. So I do believe we have another follow-up. Uniform guidance is federal grant making rules that require, among other things, that we do competitive bidding, proposals, et cetera, above certain procurement thresholds. So is that then, if they would determine they would have revenue loss, would then subsequently with the expenditure of those funds, would they have to follow that? That's what my assumption is.
Yeah, that I don't know the answer, but it sounds like a good assumption. It doesn't allow you. So for instance, something that the FAQs do say is that, for instance, if you want to use this for infrastructure, it doesn't allow you to bypass existing laws that would require, if you were building infrastructure with local money, some other local money, it doesn't allow you to bypass those, whether it be permitting or other like environmental concerns, for instance. I saw another question. Do we have a calculator for lost revenue? We do. I'm going to find it once I can get back to my mouse.
Well, that would be incredibly helpful, Mark. So
Yeah.
really, really appreciate it. Another one, that question, and you can get back to trying to find that, but another one was I had a question over Davis-Bacon requirements of the federal funds. Would this apply then for the money that will be going out to counties?
The interim final rule talks about prevailing wage. And there was, I usually have a slide that says you have to kind of decode the language in the interim final rule. There's a lot of shoulds and we wish you could, and if at all possible, please do. And then there's like, you must. And I don't recall offhand whether Davis-Bacon is something that you must do, but it is certainly something that the interim final rule suggests that you do. So I'd have to get back to you on whether it's which category it falls into. Clearly, Treasury would like you to.
Okay. Thank you very much. So I'll let you go do some digging there. So appreciate it, Mark. I will turn it over to Carrie now for her presentation.
Thanks, Jamie. I'm going to go ahead and try to share my screen. Let's go here. Sorry. If I share, and then share here. Okay, are folks seeing my screen? County chart of accounts at the top.
Yep, we see it.
Yep. Okay. All right. So for the purposes of what I'm going to talk about today, obviously you're talking about the important pieces with NACO about what are the funds available for, what can you use them for, how do you get them, all that sort of thing. And so what I'm going to highlight is just some of the suggestions regarding tracking the funds once you get them. So tracking them within your existing accounting system. And I'm going to reference the chart of accounts, which is the county uniform chart of accounts. The county uniform chart of accounts is a work product of the county finance committee, which is a statutory committee made up of auditor of state and various sized elected officials from counties across the state. And one of their, as I said, one of their work products is the uniform chart of accounts. And so that chart of accounts is posted on the Department of Management website. County auditors are going to be the ones, that are working with the chart of accounts primarily. And it's just a uniform way to track revenues and expenditures and is helpful for reporting, right? And it creates uniformity across the state. So with the different COVID revenue streams that have come in, what we have done is consult with the auditor of state to determine, well, where should we be tracking these funds? What are some codes that will be added to the uniform chart of accounts once the county finance committee meets again? Again, just to create some uniformity and try to get people on the same page for how they're tracking stuff. It's really for your, from the county perspective, really for your ease and trying to, help you get things tracked and easily findable when you have to report on them, right? So we do suggest when you're making expenditures related to COVID and, anticipating those expenditures to be paid by a different revenue source, that you do use a project code to tack onto those to better differentiate those. We did add on a sort of preliminary basis, and they'll be formally added to the chart of accounts once the county finance committee meets again. We did add some intergovernmental revenue numbers for the CARES Act and also then for the American Rescue Plan Act. So if you open up the chart of accounts now that's listed on the website, you wouldn't see them, but I have communicated those to county auditors as, you know, this is revenue codes to use. These are within an existing category. So it's not outside, you know, the original reporting structure. It's just simply additional grant options as intergovernmental revenue. And specific to the American Rescue Plan, there was a lot of sort of back and forth and discussion regarding tracking the American Rescue Plan revenue as it comes in, especially because no one was for sure how restricted the funds would be in their use, right? So there's a lot of discussion on, you know, how should these be categorized and how should they be tracked? And so in discussion with the Auditor of State, what we came down to is that really it could be either a sub fund of the general fund or it could be a special revenue fund. So it could be a special revenue fund. It would meet the definition of a special revenue fund. However, it's not an ongoing special revenue stream. So if the county management preferred to track it as a sub fund of the general fund, restricted sub fund of the general fund, they could. Just because, you know, for money flowing, it might be an easier location to keep it. But again, that's a management decision and your comfort level. The county could certainly visit with their own individual audit firm on what they would suggest. Also, because it could be considered sort of a general revenue stream, revenue type 4 would be appropriate if that's how you're tracking it. Again, it kind of goes back to the fact that the usage is very broad. So for tracking, you could sort of anticipate it as kind of a broad revenue stream as far as its use goes. But obviously, again, you need to be comfortable with how you're tracking and how easily you can pull that information out for reporting. For that initial receipt of funds, many counties are finding are using the 9100 function code because that's general county management. And again, because of the nature of the broadness of the revenue, and folks don't necessarily know exactly maybe, you know, the precise type of expenditure those funds will be allotted for at this time, then that seemed like a logical destination for it. Since, you know, counties are receiving funds directly from the Treasury, we don't really, you know, kind of play a role in that sort of process at the state level. But I will tell you that this is more directed towards my county auditor folks. You know, small cities will be receiving money through the state. If they're not large enough to receive a direct allotment from the Treasury, then it will be going through the state. You know, you'll have some small cities that are receiving some money, and just sort of, because my county auditor folks, you guys are always great working with the little cities. Just be aware of that. You may randomly get some questions from some of those little cities regarding the funding, and certainly direct them to Department of Management. And we'll try to get them where they need to go with their questions, but just kind of a heads up there for those folks. And then that's kind of it for me. And then, yeah, just let me know if you have any questions, and I'll give some time back to NACO if they would like it.
We do have a question for you, Carrie, from
Sure.
John Norris
Yeah.
that says that we have heard the state does not plan to apply for the next round of emergency housing assistance funds. Wanting to know if that is correct, and if so, how did the state determine there is no longer a need for assisting economically stressed individuals and families with housing costs?
Excellent question. Frankly, I don't know the answer. That might be a question maybe for the governor's office, if that's who applies for that funding. That might be the direction for that question. Department of Management's not been involved in that process. So,
Okay.
so sorry, I don't have that answer.
Well, thank you, Carrie.
Sure.
I'll let you know that we're, as Mark had mentioned before, that, cities will be receiving their own allotment of funding as well. And then also the state of Iowa will be receiving $1.2 billion. And so we're in talks with the governor's office and also with the League of Cities to look at ways to maximize those dollars.
Oh, sure.
To make
It's
some,
only logical. Yep.
and so we'll, as the state makes their announcement, on how they're going to allocate their funding, we're trying to work in concert, with the governor's office and then also with the cities to make
Yep.
sure we maximize those dollars.
Yep. Makes sense.
Yeah. So
Jamie, maybe you could take that question to the next meeting with the governor's office.
Yep, I will definitely do that. Okay, well, looking at questions. Okay, so we have another question about lost revenue. Can you calculate lost revenue each year through 2024?
Yes, and it's good. It's good to see you, Bill. Let me just note that Mr. Peterson was a really great partner in bringing the county concerns to Congress as we were passing this bill, and so I had in my notes to mention that up front, and I probably didn't. But thank you. And the overall here is that this bill is very good to counties in a way that it is not necessarily good to every city. And part of that reason is for the advocacy work that you and people all over the country did, and partially because county governments are very credible in Washington, D.C. and people on Capitol Hill knew that counties would spend the money wisely and quickly and efficiently, and therefore every single county got an allocation in a way that every single city did not. So worth noting. Can you calculate lost revenue in future years? Yes, which I think makes it very, I don't know what the right word is, but flexible. So if you don't have lost revenue based on the calculator I put in the chat this year, you try again next year and in subsequent years. And just to recap what I put in the chat, the first thing I put, or sort of working up, the last thing I put was this calculator, which we developed with GFOA, who are truly the math wizards. It's cumbersome. It's every possible line of your county budget. But if you put all the numbers in the right way, it's going to spit out a number for you in a way that you can trust. And then the link before that is a probably an hour or so long webinar on exactly how to do that. So I would imagine, if I were giving advice, it would maybe watch the webinar first, get really acquainted with this process, and then use the calculator.
So we have another question here on current construction projects that are underway and that are running into costs that are higher than projected due to increased supply costs due to COVID. Can ARP funds be used to offset these costs?
Generally, no, unless it's used with that lost revenue money. We wish that Treasury was a little bit more clear on this. On May 11th, wow, was that long ago? Yeah, I think it was May 11th. We had a call, or was it May 13th? So you should go back and look. There's a list of the calls. We asked them this, and I believe their response is like, we'll get back to you, or we'll put it in future guidance, and they haven't done that yet. This idea is, how do you commingle the money? So, let's say you have an ongoing project, or you have a project that is funded partially by state dollars, partially by federal government dollars. Like, how do you treat ARP money in that context? And I don't think we have a great answer to that yet.
Very good. Well, I think that covers the questions that we have right now. Certainly can't thank you, Mark, and for Carrie enough. Obviously, just ahead of time, we'll be continuing to lean on you for guidance as this situation moves forward. Obviously, this is a work in progress, And like I said before, this is going to be a series of webinars that will be providing guidance from our members. There was a question on the chat asking about the constitutional concerns that we've heard in terms of expending funds, to businesses or even for nonprofits. And our next webinar will have the auditor of the state next Thursday, and we'll be sending information out to address specifically those issues. So please, for those that are a part of this and are tuning in, to tune into that as well to address that specific concern. And obviously, as things become more apparent in regard to lost revenue, we'll be providing additional information. So yeah, again, Mark and Carrie, we can't thank you enough for being a part of this today. And you've provided a tremendous amount of useful information for all of our members. So thank you.
Thank you so much for having me.
Always glad to talk to you guys.
All right.